morning, ladies and gentlemen. Good morning, Hodl Nation. I would like to welcome you to our May webinar for Cypherpunk Holdings. As always, I would like to welcome all of you that have taken the time to join us on this lovely Friday morning. My name is Veronica Oswald. I'm the head of investor relations at the company, and I am, of course, joined today by Jeff Gao, who is the CEO, and also our CFO, Doug Harris. They will both give you an update on our corporate activities and what has happened since our last webinar. Just to do a little bit of housekeeping, as you are probably aware, the webinar is being recorded and will be posted to our website after we are done, most likely on Monday. So I do hope that you enjoyed this session. We would like to make this as interactive as possible, so feel free to send us your questions using the Q&A box, and we will be addressing those at the end of the session. I would like to now hand over to Jeff. Thank you very much.
Thanks, Veronica. And before I begin, just apologies to everyone for holding this on a Friday morning, Eastern Daylight Time. However, crypto is a 24/7 business, and that makes me a 24/7 CEO. So unfortunately, going forward, it is likely that these types of calls would probably have to occur at this time. However, if we can arrange for it to be at a more hospitable time, we will endeavor to do so. And on that note, thanks for everyone, to everyone for attending today. Progressively, these investor presentations will be less about me providing updates and more about a two-way engagement between myself and the investors. So I'm going to try and keep these presentations brief so that we leave as much time at the end as possible for Q&A. And that's kind of like the part that we're all looking forward to anyway, that interactive engagement. And so hopefully we get a lot of that today. So it's been a while since we've provided an update. In fact, last time we spoke in February. So there's quite a number of things going on, and I'll take you guys through that today. Just as a forewarning, none of what we're going to go through today is meant to be forward guidance, and it's meant for institutional investors. So please take that on board with everything that we're going to say today. So since becoming CEO, my job has been to figure out what Cypherpunk's core competency is, and also try and investigate opportunities for us to be more than just an investment holding company, because quite frankly, there isn't a lot of competencies necessarily in an investment holding company. It's not very exciting. It's not very innovative. So it's trying to find a way for our company to elevate ourselves out of that trough, if you will. So we've been looking around, looking at different ecosystems and at different partnership opportunities to see whether there's any synergies to bring projects in-house and internalize these things within the company. On that, we've also made a number of changes to the way we allocate capital and the way we make capital allocation decisions. And the guiding principles behind that capital allocation decision, whether it's acquire a business or whether it's to manage our cryptocurrencies, these guiding principles are: number one, sector exposure, to ensure that shareholders who allocate capital to us have an appropriate exposure to the crypto sector in general. Secondly, we have to ensure that there is sufficient diversification. So we're not just invested in one particular type of market, whether it's a spot market or the derivatives market with respect to crypto. We're not on a single exchange. We're not limited to a small number of or a single counterparty, and that we're exposed to a number of different instruments and ecosystems so that we provide that diversified exposure to our shareholders in a way which would be otherwise very difficult for them to replicate themselves. And then thirdly, we offer risk mitigation, which is more or less drawdown mitigation, right? Being able to risk off appropriately when the markets are weak, and then be able to put that risk back on when the market is starting to show strength. And again, that's a competency which is very hard to replicate at the retail level, or otherwise very challenging, and that's something we hope to excel at, especially given the size or the sizable nature of our treasury. So we are becoming a much more focused business in that anything that is considered non-core, we will divest away from. And that includes things like IP addresses, which quite frankly, since their acquisition has built up quite a nice capital gain. So we'll be exiting from those positions because it's consuming corporate effort, and we don't want that attention diffused along different lines. We want to make sure that it's focused along specific lines of businesses where we intend to build competencies. And that's a really important point here. We want to make sure that we build the team in a way that's lean, that's agile, but that's also focused and specialized in a small number of things that we can do, but do very well. So we're divesting away from non-core assets where we have neither the capital intensity nor the expertise to compete against other candidates. Right? So that includes things like Bitcoin mining, right? You want to invest in Bitcoin mining, you've got Riot, you've got Marathon, you've got Hut 8. You want to invest in Cypherpunk for Bitcoin mining. So our creative capital and corporate energy are focused on two things. Firstly, they're focused on managing money in the form of our crypto treasury, and 90% of our net asset value at the moment, or thereabouts, is within that treasury portfolio, which at this point in time is 633 ETH, or thereabouts, and then 406 Bitcoin, right? So we have to manage that appropriately on behalf of our shareholders, in a way that's not just buy and hold, right? We're not going to just stick those coins in a wallet somewhere and then just let it sit there. That's not what our business is about. It's about active treasury management, something that I will talk to in the slides below. And then the second line of business that we're focused on that we're pretty good at is venture capital, right? Which currently our portfolio is a split between privacy tech in the form of Wasabi, Samurai Wallet, Engrave, as well as Web3 investments like Animoca and Goat. And then going forward, we will be making more informed decisions and capital allocation decisions in relation to onboarding new Web3 projects. But there's a due diligence process around that. And also we have to be conscientious of market regime. So, for example, we wouldn't necessarily be doing these types of deals in this type of environment, or foreseeably for the next 3 or 4, even 6 months, right? But certainly after that, we might be back. So there are a number of transformative ideas that are in various stages of development. Each one of these has the potential to rewrite the company, in that each one of these ideas has the ability to elevate us from the status of investment holding company and into one that is of a real business. And then there are various stages of progression. So I've just provided a handy qualitative label to provide an indication as to how well they are progressed. Right? So some projects are at the conceptual level, whereas others may be a lot more advanced, right? And they're color coded for ease of navigation. So the first idea is to build a crypto business, or otherwise acquire crypto business within Cypherpunk Holdings that we can operate, and that we have the competency to operate, or otherwise we're able to build the competencies around its operation. So an investment holding company like Cypherpunk, or any one of the ones that you can name that's listed on the CESC, the NEO, or even the TSC, in the investment holding company structurally has a discount to NAV. And that discount to NAV, you can pretty much observe across the board. And it's not unique to Cypherpunk Holdings. It's unique to the industry. And we're not necessarily content in trading at a structural discount to NAV. And if we want to do anything about it, one of the things that we can do is to no longer be considered an investment holding company. So operating a business with recurring revenue within Cypherpunk will potentially redefine who we are and also help to build out some of the key roles and competencies within the company. So that we're not just a team that manages a portfolio of investments passively, right? We're more active in how we go about it. So the prospect of acquiring a private company with a proven business model, using a deal through a deal that uses our shares, for example, in that acquisition, is something that's being actively considered. Right? So that's at the early conceptual level. Active treasury management is something that's well advanced, and it's something that we're currently practicing. And it's doing quite well. So again, 90% of our NAV is tied to treasury, and we need to manage that wealth prudently on behalf of our shareholders. So buy and hold is not viable, although historically buy and hold has done quite well for Cypherpunk. Right? For the past 3 years since our inception, we've essentially, for the most part, purchased and accumulated Bitcoin, and that's done well for the company. But that time is well and truly over, and that any investor these days, without even necessarily owning a wallet or knowing how to own their own wallet in a self-custody manner, will be able to acquire Bitcoin on an exchange and hold it if they wish to. Right? So that there is no longer an advantage in doing that. And certainly I wouldn't expect that I wouldn't pay a company and their management expense ratio to simply go ahead and buy and hold. Right? So we need to do something that's a lot more sophisticated and more diligent and more responsible for our shareholders. And that's what active treasury management is about. And it begins with the recognition that when we hold cryptocurrencies, when we make that decision and we express that long-term view, we are warehousing risk. So by having Bitcoin on our books, we are warehousing risk. By having Ethereum on our books, we are warehousing that risk. And when you take on risk, you expect to be paid for it. Right? That's why they call it a risk-adjusted rate of return. And so what we've essentially done is we've taken that Bitcoin and that Ethereum, and we've deployed it to a number of OTC vendors and partners, and we're using those coins to currently write call options in order to generate that risk premium. And that allows us to use things like Bitcoin and Ethereum to essentially generate a yield. And that's a yield which you would typically observe if you were to buy a token and stake it, but obviously you can't do that with Bitcoin, right? And a second benefit to this strategy is that it also allows us to buy and sell coins as well, as effectively using those types of contracts to set limit buy and sell orders, which you would otherwise be able to do in the spot market. But in this case, you also get paid a premium for having that risk on your books. That's active treasury management, and it's at an advanced stage in that it's already gone live. All right, and also instruments within the derivatives market tend to be mispriced. So that mispricing allows us to be opportunistic and capitalize on, as long as we have the right quantitative models in-house, which we currently do. And that's the means by which we go ahead and undertake these trades. Right? So the strategy is model-driven. It's also got discretionary overlays in that qualitatively the investment committee is able to set bounds in terms of what can be done within the scope of those trades. And it is also managed 24/7. And here's just a quick snapshot of the results today. So this is one of the dashboards that I use day to day to track where our positions are. Happy to talk about it further down the track if there are any questions on it. But I suspect the audience and members of the audience may need some time to maybe process it, and then there will be opportunities to ask questions down the track as well. So I won't talk too much about these slides, but it's there for you to go through at your own leisure. So when we deployed active treasury management, and it is actively managed, as we started to operate that line of business, we came to the realization that there are certain elements within that business that can be extracted. And that we can extract it and we can systemize it in a way that's more passive. So in developing this strategy, as we gain more confidence in operating it. We're also exploring the idea of building systematized and scalable solutions that can be deployed via structured products for the benefit of institutional investors and get access to institutional flow. So that's something that we're also working on in tandem to improving the way we manage treasury actively. And there's a number of benefits to that as well. So we need to partner with someone to go ahead and do that because there needs to be there's resource in terms of human capital as well as getting access to institutional trading desks in order to get access to that flow. So again, a number of discussions that we're currently having to see where that leads. Okay, so that's pretty much an update of all the various bits and pieces that we're working on. So it's been quite busy, and we've got a number of threads that we're pursuing in parallel. At this stage, I might just pass it over to Veronica to go through the questions in the chat.
Thank you, Jeff. Actually, we haven't got any questions yet, so I would really encourage all of the attendees, if you guys do have any questions, please do pop them into the Q&A box so we can answer those. Just to also remind you that these slides will be added onto the website with the recording. So if you want to go through some of the more detailed numbers, you will have the opportunity.
Right. What we'll do is we'll just give everyone a couple of minutes and let the let the chat build up.
Maybe we can discuss a little bit more about the deployment into the different strategies and the different funds that we have currently invested in. Oh, actually, I take it back. We do have a question from Brian Tilson. Thank you. Is discount to NAV more down to the fact that the company has issued so many options and warrants? So Brian would like to understand whether the discount to NAV has been caused by the number of shares in issue and options and warrants.
Yeah, what I'll do is Doug, our CFO, is actually in this meeting as well. So Doug, I might hand it over to you to give us an indication as to what the diluted capital looks like.
Well, without going into the dilutive capital, the discount to NAV is not related to the options or the warrants. I think almost all of our options are out of the money, and our warrants are all way out of the money. So they're not calculated. You know, they don't have any impact on our earnings per share or our NAV per share. For whatever reason, the market is. You know, that's the price. Our stock's priced where it is for whatever reason. Everyone will have their own opinion, but it doesn't have anything to do with the options or the warrants, in my opinion.
Okay, cool. Veronica, I see that there's actually a number of questions in both the Q&A section as well as the chat section.
Yeah, they just popped in, so okay. I'll go through them. Yes, we've got one more question here. What would be the capital gains liability at the current prices?
We calculated those prices recently. I'm going to assume that this question relates to our Bitcoin and Ethereum. Right now, we do carry if we were to theoretically sell our Bitcoin and Ethereum, we would be carrying capital gains in both instances, although prices have corrected and quite sharply over the past 24 hours. So I think we're still in a marginal capital gain territory. So if we were to theoretically sell them, we would have a tax liability.
Okay, another question. Will you be announcing the Q2 results on the newswires?
Doug, what's the time frame for releasing second quarter?
Time frame's the end of the month. We historically have not put out a press release, but we'll consider it at the time.
They will also be available on the CSC websites and all of the official filings. That's great.
And on CDAR.
Correct. So another question here. Can you please update the strategy with the 3 crypto hedge funds and the current results?
Cool, sure. So the hedge, we only very recently invested in the hedge funds, and the best performing one has, well, there's actually 2 types of funds. One is an ARB fund, and so we've invested in 3 different types of arbitrage funds with 3 different providers. We did that because of diversification reasons, and we're not just talking about sector or market or instrument diversification. We're also talking about methodological and operational diversification, in that each one of those guys do different things and go about it differently. But there is overlap, but we've tried to select these funds applying similar types of approaches to the crypto market in a way that's minimally overlapping. So in terms of the arbitrage funds, it allows us to access strategies which we cannot replicate in-house. So active treasury management is not about arbitrage, it's about position management. And so in order to access that aspect of the crypto market, which is incredibly young, we've decided to invest in those funds. And they return an average around about 1 to 1.5% per month. So it's a grind. It's not exciting, but that's precisely why we invested in it, because its performance is largely uncorrelated and orthogonal to what we do in-house. There is one other product that we have invested in with 168 Trading called the Selective Long product. And that product looks a lot like what we do with active treasury management. And the reason we invested in that product specifically is, one, we get to access its performance in that they do things in a way that's a lot more sophisticated than we do it. But they also have a performance fee. So one is to access the returns from that product. But more importantly, I wanted to set a benchmark for how we perform with active treasury management. And the benchmark that I've set is to outperform 168's selective long on an after fees basis. And currently with 71 or 73 days of go live, we're on track to do that.
Excellent.
And that fund is returning about roughly 5% per annum, but it is a lot more volatile in that it has a long thesis rather than a market neutral thesis.
Thank you, Jeff. Cole, could you also clarify the strategy with the call writing?
Yeah, so when you write a call, so these are, when we sell calls, these are covered calls in that they're 100% collateralized. And if we were to ever write puts, which we do so much more sparingly at this point in time, they are also secured puts in that it's also 100% collateralized. And we don't take on any leverage, and they're all physically settled. And the reason we do that is, historically, if we wanted to buy Bitcoin for whatever reason, because we think it's low and we want to express that view, we go into the spot market and we set a limit order. But another way to buy Bitcoin, which is a synthetic type of limit order, is if you sell a put, right? Because if you buy a put, the buyer of the put has the option to sell, which means the counterparty has an obligation to buy. If somebody has the option to sell, then someone must have an obligation to buy, right? So we're in a market and we want to buy at a level, we sell a put. Right? That's effectively a limit order. But if you do that transaction in the derivatives market, you also get paid a premium for doing that. Right? And we get to, pick the horizon as well in terms of the expiration date. And these are European options. Similarly, if we want to sell some coins, right, we can set a limit order in the spot market, and then that would be it. We don't get paid anything for doing that, but we're expressing a view, and there's risk there somewhere, and we want to make sure that we're harnessing and harvesting the risk premium in expressing that view. So we've migrated that action to the derivatives market, where if you're a buyer of a call, the call gives the buyer the option to purchase the underlying, which means that the counterparty in our case has an obligation to sell, which is effectively a limit sell order. And that's effectively how the put and call selling works. All of it is quantitatively driven using a model built in Python, but it also has the qualitative overlays and the discretionary controls imposed on it by the investment committee.
Thank you, Jeff. We also have a question, if we could perhaps discuss the market outlook and what impact this is going to have on the strategies we have just deployed money into.
Cool. The market outlook is shit, and it will continue to be shittier going forward, at least over the next 3 to 6 months. How will it impact active treasury management? If we don't sell any of our coins, we would have, potentially unrealized losses. But we have a long thesis in these coins in that we might sell some at the margins. But if we have a negative view on the market, if Bitcoin were to fall to 20,000, we're not going to sell all of our coins, right? Because we want to have that underlying exposure, but we might take some off the table. And the presence of these coins is incredibly important because they will allow us to continue to write covered calls, in the sense that we also need to have liquidity as well for various reasons, but also one of which is allows us to continue to sell secured puts. And so in terms of vol trading, accessing crypto volatility as a means of harvesting that premium as a form of structural and continuous yield, that business is not going to really be impacted by whether Bitcoin is at 20 or 30 or 60K. I mean, the size of the yield will vary a little bit, but as long as crypto doesn't go to zero, that will generate a structural yield, which will more than cover our expenses. And Doug, correct me if I'm wrong, but I think our management expense ratio is we're burning about $1 million Canadian per annum. Is that correct, or is it USD? I remember we had that conversation.
Yeah, our cash burn is approximately $1 million a year.
$1 million, is that Canadian?
Canadian.
Great. The active treasury management, in terms of the risk premium harvest on a per annum basis, is expected to be around about 3 million USD per annum. Let's call it, 3.5 Canadian. So we're in a pretty privileged position in that we got our costs covered and then some. And that the and then some, what do we want to do with it? Buyback, if we choose to. Dividends, if we choose to. Reinvest it into the ecosystem, if we choose to. We still want to raise capital, but we no longer need to raise capital in order to cover our expenses, right? We have now the ability to choose the time and place at which we want to do these types of capital raising events. With 2.5 million every year, let's say that'll allow us to grow, but it won't allow us to grow at a rate that we're necessarily satisfied with, right? So we will still be looking to go back into the market to raise funds, but we will do so opportunistically. And we have the patience and the latitude and the luxury to wait if we wanted to, right? We can now survive a crypto bear market. If it goes to zero, then everyone goes home. But as long as it doesn't do that, we can sit and wait and, wait for the market to come to us.
Great. Another question. Is there a marketing strategy to let people know about all of this great work that we are doing? We're going to be deploying more resources into marketing and spreading the message out?
In terms of marketing, we will continue to be active on our socials, and that includes LinkedIn and Twitter and LinkedIn mostly, but also Instagram and Facebook. And we will continue to do these calls. And so in that regard, we will be diligent and we will be persistent. In terms of dollars spent, I won't be spending a single marketing dollar until we have both pieces of the puzzle in place. And that is, we're managing our treasury on behalf of our investors, but that still kind of makes us an investment holding company, right? Because you're holding treasury and then you're managing it. But what's replenishing that treasury. We don't actually have a business that generates revenue that replenishes that treasury. And I wouldn't consider active treasury management a business in and of itself. And so it would be great if we can, either through an M&A or some sort of a partnership deal, acquire a business that, for example, generates Bitcoin as revenue. And then, that's the thing that replenishes our treasury over time, which we will then manage over time. That's just one example, right? But until we transform ourselves into that type of business, in whichever manifestation it takes, we don't really know what it is that we're channeling to the market. So we will still communicate our progress to the market. But in order to run a marketing campaign where we're going to put hundreds of thousands of dollars behind that campaign, potentially on a per annum basis, until we figure out exactly what those pieces look like, we're not going to be spending a dime.
Thank you, Jeff. Another question about GOAT. How is our GOAT investment doing? Can you give us an update?
Yeah, so according to GOAT, the internal valuation, which is the valuation that they're currently running to raise their DAO round, right? So they're offering tokens in their GOAT DAO. They value themselves at around about I think 45 to 50 million USD. Their seed equity round was raised at 2.5 on a post-money basis. So, on paper, it's done great. But GOAT is building out a platform called MetaFi, where they will merge various aspects of Web3 activity. This includes GameFi, crypto gaming, as well as things like advertising, where you do something like decentralized or sandbox, and then in that environment, you buy digital land and you can put ad boards on there or whatever. So all the various different pieces of earning activity that you can currently undertake on Web3, they're hoping to unify that on a platform which they've called MetaFi, and that's due to be launched at the end of this year. The success or failure of GOAT is pretty much tied to the success or failure of MetaFi. If MetaFi fails, GOAT will fail. If it succeeds, GOAT will succeed. That's my view anyway. So I think it's quite binary, and we'll figure out at the end of the year. But at this point in time anyway, as they're raising funds for the DAO round, they value themselves at 50 million USD or thereabouts, and that they have a target of 4.2 million for the private round, and I think they're at 3 at the moment. So they'll probably close out by the end of May.
Thank you. Another question, if dividend is a future possibility, would it be offered to shareholders in the form of a Bitcoin?
I don't know if it will be offered in the form of a Bitcoin. I think like operationally, that might be a little bit hard to manage or to set up. It'll be pretty cool if we can do that. And I'll certainly speak to Mo, our Chief Investment Officer, in relation to that, and then John as well. That's probably more in their camp. But I have given serious consideration to paying out a dividend. My hesitation are as follows. Number one, when a company pays a dividend, it kind of tells the market that they don't really know what to do with the cash. And we know precisely what to do with the cash. The active treasury management generates around about 20 to 30% yield per annum on the capital invested. And for every dollar that we generate, if I pay that out as a dividend, that is $1 less to deploy to this strategy. That is not to say I won't declare a dividend. We certainly have the ability to do that. But I think it's also important to reward shareholders, like long-suffering shareholders who's been with us for a very long time. I think paying out a dividend is, it's good signaling. So I think in that sense, it is quite compelling. But I just got to balance that out with, our internal rate of return targets, where investors give us capital so that we can perform these salient capital allocation decisions on their behalf, and that they have the right exposure. And so I just got to balance the need between ensuring that we're actively contributing to offering that exposure and maximizing the benefit of that exposure to returning capital to shareholders in the form of a dividend. So I'm 50-50 at the moment. It's a long way of saying it.
Excellent. A couple of more questions. How long before the company turns profitable and before we start making the market aware of all of the activities? What is the horizon?
I'm going to let that happen organically. We like by 30th of September, we're going to be profitable in terms of you being able to see that on financial statements. So I think, in the first quarter, I mean, active treasury management has been running for 70 days or so. In the first quarter, investors, when they read the financial statements, are going to see a revenue line item, and they're not going to know whether it's once-off or recurring. And then they're going to see it for the second quarter, and then they're going to see it for the third quarter, and then the penny's probably going to drop and go, well, that's probably going to be there for a while, right? It's sticky. So I'm going to let that happen organically, and then just let it reflect in the financial statements, because we don't know what will happen going forward. Maybe the whole thing gets canned and gets terminated for whatever reason, but I expect it to stick around. And if it does stick around and it earns that 20 to 30% yield per annum, the way it's been managed, then we've got all of our bases covered. So that is the expectation at this point in time, but I would still consider it speculative, because it's a proof of concept, right? It's been running for 70 days. It needs a little bit more time.
Thank you. Another question, how can we add crypto opportunities into the top of your investment opportunity funnel? And I presume that is coming from the community, how they can bring opportunities to us.
Well, we have a pretty robust pipeline, new deals coming through. And certainly at this point in time, and it's not just, this is industry-wide, there's a lot more opportunities chasing capital than there is capital available. It's pretty tight at the moment. A lot of investors are in cash, and they're pretty nervous about the fundamental economics of Web3. A lot of it still needs to be proven out. If you take GameFi, for example, right now, if you're a participant in a crypto game and you're doing a whole bunch of stuff to earn coins, it's a highly inflationary environment where they're paying you in coins, and the people who buy those coins off you that allow you to convert to USD or whatever, they're basically speculating on the system growing. And that speculation is that play to earn eventually becomes play and earn, that someone somewhere will come into this ecosystem and pay to play these games, which is a bit of a long shot. And then the same thing goes with digital real estate, right? Where you buy effectively a plot of land in one of these digital environments, and you try and build a bunch of economics around it. None of that has worked to date. A lot of it has been attempted in the past. Large companies have spent money on it as a proof of concept, and nothing has held up to date. So there is a lot of there are a lot of unanswered questions and doubt regarding the just how tenable this whole Web3 economy is, and that's part that in addition to crypto being a risk asset and correlated to what's happening across the broader equities, especially the NASDAQ, and the corrective phase is giving pause to a lot of these investments. And I want to say that the same sentiment is being reflected here at Cypherpunk, which is why we've taken a step back from our venture capital activities, and we're more over the immediate term anyway, we're more focused on managing the treasury, and then also exploring ways to build a business within Cypherpunk.
Thank you for that, Jeff. No more questions. I do have one remark from one of the attendees mentioning that yes, dividend or share buyback would definitely be appreciated, since a lot of people have entered and purchase stock at much higher prices, but he's happy with all the progress and the work that is happening. So keep up the good work.
Yeah, I saw that, and thanks, Mark, for the kind words. There's two things there. One is the payment of a dividend, and I think it is very compelling. I don't want to make any promises I can't keep. So let's take that for what it is. The second aspect is the shares being underwater. It's important to realize that if there's let's say there's 1 billion shares, that we have 160 million shares outstanding, right? Let's say there's 1 billion shares. And all of those shares are locked up and untradeable, with the exception of one share. The buying and selling of that one share determines the market price of that company. And so I bring that up because over the last 12 months, the average daily volume of HODL shares being traded is 400,000 shares per day, which is in the tens of thousands of dollars, right? So there's really not a lot of volume, and it doesn't really take a lot for the stock price to go up or down 20%. So what I would encourage investors to do is, if our stock drops 20% or it goes up 20%, in those instances, it is no use panicking as much as it is no use celebrating that move, because it really doesn't mean anything. I think what is important is, would the market recognize us as a business once we make that transition? Or are we going to do all that work and the market's going to read it, they're going to consume it, they're going to internalize it, and they'll still trade us, they'll continue to trade us at, structurally discounted NAV. I think that would be a lot more important as a point of consideration. And also, our market cap is what, 20 million at this point in time, right? There are a lot of, the institutional investors wouldn't even touch us if we're at 100 million, right? We kind of need to crack that multi-$100 million mark before we even get a sniff at by the larger institutions. And it's very hard work to climb, because along the way, you have to court retail investors to get you to that market cap and stay at that market cap. And there's a number of different parameters that institutions look at as well before they would even consider taking a stake in you. And then once they do that, you have to make sure that they don't sell, because when they sell, right, and they get rid of a big chunk, right, we saw that yesterday with the NASDAQ and the QQQ, where it was just really two large institutions that were selling their order book, right, and that sent it down, 3-4%. Yeah, these are two different things, right? We have to get our market cap up, but that's a slow grind on the way up, and we've got to figure out how to do that. And the best way we know how right now is to no longer have the market regard us as an investment holding company. So that's the first thing we're going to try.
Thank you, Jeff. General question: will the recording of today's session be available today on YouTube? If I can get the recording today, it would either be available later today or Monday, the latest. So yes, it should be pretty imminent. Another question: are you considering staking or yield farming as a way of generating income?
No, simply because if we do so, we have to hold shit coins. We kind of want to limit ourselves to Bitcoin and Ethereum. And yes, you can stake Ethereum. But another way is to, you can sort of use Bitcoin and Ethereum as collateral and then to acquire those other tokens to stake. The reason I don't want to do that is it loses the feature where we can risk off. In that if you stake a coin, it's locked up and you can't really touch it until the end of that vesting period. Whereas with these options contracts, right, there is, if you trigger if it settles in the money, you sell those coins, right? If it's a call option that you sold, if it's a put option, if it settles in the money, you have the option to buy. So it gives us the ability to actually buy and sell, if you will, in accordance to that expiration, if it expires in the money, which it doesn't give us with respect to staking. And also with staking, it usually involves coins that's outside of the outside of the universe of coins that we're looking at.
Thank you. One more question about dividends. Is the company considering issuing dividends to bring the dividend investors as part of the shareholder base? I think we probably covered this a few times, but anything else you would like to add there, Jeff?
Yeah, I think there are, there's dividend type income funds as well. But again, I think the main point of concern for those types of investors, and again, we're really talking about institutional investors, is the market cap is probably too low. So if I were to issue dividends, first of all, I would like to make it an ordinary dividend rather than a special dividend, if I can help it. And it really is primarily to reward long-standing shareholders for being with us and for being so loyal. So I think that's quite important, that reward mechanism and that recognition for being with us for so long. So that would be my primary motivation.
Thank you, Jeff. I think that is it from the question side. We can give it another few minutes in case someone has some last minute thoughts. If there are any other questions, again, we are always available, so feel free to email us. We also have our social channels, so you can reach out through those. And of course, we will be holding another investor webinar as soon as we have some update on all of the holdings. Okay, I think no other questions.
Great. Well, look, I just wanted to thank everyone for attending today, and I do apologize for where our share price is at the moment. But unfortunately, there is very little I can do about that. However, what we can do and what we do have control over is how we build this business, and that's where our focus will be over the next 3 to 6 months.
Excellent, Jeff. Thank you very much. Thank you, everyone, for attending today. And we will hopefully see you very soon. Thank you.
Right. Thanks.